it's different for each of the different countries. So it depends on what percentage of oil exports makes up of their economy, their planned level of government spending, the imports that they bring into the country. So it is different. I think, the $60 per barrel is a significant threshold. Ideally, Saudi Arabia needs a number higher than that to balance their situation. Russia, they're okay with a number reasonably lower, so mid to low 50s. So it's different for each of the different countries, but I think there is a mental threshold of $60 per barrel.
Is there a price floor, though, Spencer? You talk across the board there, including all of those different countries, and as you rightly point out, all of their different priorities and requirements. Is there a price floor, you think, that would force them to take more drastic action than just rolling these cuts over?
Yes, I think that is $60 per barrel. And our view at IHS Markit is that if they were to just sustain the current level of cuts, that wouldn't be enough to stop the price from dropping down into the mid to high 50s next year, because we see significantly more production coming on stream faster than the world's demand for oil is growing.
So I just want to bring it back to supply-demand balance, and certainly there's lots of talk about not just extension but further production cuts. Our colleague Dan Murphy sat down with the Iraqi oil minister, who himself had suggested that maybe in order to bring the market back in balance, you'd need to see an extra 400,000 barrels a day taken off the market. In your view, and according to your own analysis, how much production cuts are necessary to bring supply-demand back into balance?
Good question. It's a complicated question. It's interesting that Iraq is calling for deeper cuts when they're one of the countries that is definitely not complying with what's been promised already. But that's the politics of OPEC. Our view is that the oil market will have an excess production of around about 1 million barrels per day next year. But built into that is the OPEC cuts being actually 0.8 rather than the current 1.2. So effectively, to bring the oil market right back into balance, they would need actual realised cuts of 1.8 million barrels per day. So that's actually an increase of 600,000, 0.6 million from where we are now. Now, they might be able to get away with a little bit less cuts than that and keep the price just above $60 per barrel. But our view is that if they stay where they are at 1.2, the price will drop below 60.
And just to bring it back to another point that you raised there, compliance obviously has been an issue. And to your point, Iraq is one of the countries that hasn't been fully complying with those production cuts. But overall, if you look at the last 9 months or so, compliance has been averaging around 120%. But the bulk of it has been borne by Saudi Arabia. Do you expect Saudi to continue to shoulder the large extent of the cuts going forward, especially given that, as we know, the Aramco deal is coming to the market and expected to price today? Obviously, there is pressure on them to keep the price floored, but then equally there's pressure on them to keep the oil revenue coming in.
There is. Saudi Arabia is in the hot seat, but has been for many, many years. Since the cuts were started around about 2016, Saudi Arabia has continued to bear the brunt of those cuts, and I think it's inevitable that they will have to do so. So out of the promised cuts, Saudi Arabia is contributing around about a third. I think they are taking the greatest amount of pain, but then they have the greatest to gain probably from maintaining the price. And they see that it is critically important to keep the OPEC Plus alliance together. And if that means that they have to contribute a bit more than they've promised in order to get anything out of the others in terms of cuts, so far they have been willing to do that, and I think they will continue.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.